Today, we have another stablecoin under investigation, BUSD. And we also had USDC burn 5 billion tokens. And also, those CPI numbers you were looking at, CPI, may have been a scam. This is Around the Blockchain. Picking that up. Maybe picking that up. It's going to be a great show. It's welcome back. How are we all doing? I hope you had a good Super Bowl. We have some great guests on today, including one we haven't had ever, and then one coming back after months and months. That is right. We're going to start with Evan Aldo. Evan, how goes it, buddy? How's the trading going?
Doing well, doing really well. The shorts are obviously doing a little well. It was a little rough, trying to catch the top. That's always
Yeah.
rough. But
Did you turn
I'm
bullish in
in more
time?
of the I'm no, I've
And
still
then
been
bearish again.
generally pretty bearish. Yeah,
Hey, we
generally
had 2
bearish.
weeks of green. All right. And then we have Scott Melker. Scott, never been on before. Scott, how goes it?
Everything's good, man. No complaints at all. Although I think the market might be in for a bit of downside coming forward, but I guess we'll see.
Maybe we could turn people back into believers, maybe turn that price action upside down. And then Mind Your Biz with his wonderful background. Mind Your Biz, how are you doing today?
Hey, I'm doing great. Thanks for having me back on the show.
Hey, great to have you, man. It's going to be hot topics today. We're talking about BUSD. That is the Binance, not Binance issued, but the Binance USD. And Paxos was issuing them, and they just got ordered to stop on the 21st of this month. That is right, is the NYDFS also investigating yet again. Now, Paxos is indicating, hey, we are fully collateralized and holders. They're going to be able to redeem this at least until February of 2024. And this was dropped by the Wall Street Journal, though also the SEC might be investigating them. Now, we have this attack on stablecoins. Now, Evan Aldo, there's been a lot of volatile action lately. I'll talk about the 5 billion being burned, but I saw this FUD and then there's an instant red candle. I mean, were we on the way down already, or is this fuel to the fire, or is this reversing our course?
Based on what I study on the technical charts, we were kind of on our way down. And the thing I just want to show you to kind of start out with here, let me share my screen real quick, is this is really important to look at. Let's look at the monthly here for Bitcoin dominance. We have never seen it looking this bullish. If you're not familiar with Market Cipher, this is a giant bullish div right here. Money flow coming up into the green. So, I think we're really going to start to see Bitcoin really outperform a lot of the altcoins. And, what I think is going to happen here is I think we're going to see a pretty good correction. And I think Bitcoin dominance is really going to come up. And your time to get into altcoins and maybe look at stable coins probably won't be until after we see more regulation towards the end of the year from what I'm kind of looking at right now. So be careful with the stable coins, better safe than sorry right now. I just have, in US dollars, just earning the 3% interest you could get right now. I'm kind of satisfied with that at the moment. And I want to wait to see what happens with regulation with the stable coins right now. Bitcoin on a hardware wallet, these are uncertain times. Be careful.
Yeah, and you're talking about issuance, and you said stable coin. It makes me think, well, the coin is stable. I want to share this tweet right here. The SEC labeled BUSD an unregistered security, but skipping ahead, no one has ever had the expectation of profit when buying BUSD. CZ retweeted this, saying the lawsuit between the SEC and Paxos. I am not an expert on U.S. laws, but personally, I agree with the logic here. Now, Scott, what is wrong with that logic? A stable coin is worth $1 today, and presumably a year from now, still worth $1. So how can this be an unregistered security when I'm certainly not expecting any profit?
Well, it shouldn't, obviously. And I think that this is sort of a cute way for the SEC to attack Binance without attacking Binance. I think Paxos probably has less of a war chest to litigate and defend themselves than some of the other bigger players. And so this was sort of the low-hanging fruit, I think, for the SEC and for regulators to attack. It's actually curious because it's probably technically the hardest company they could have attacked. USDC is regulated in the United States, while Paxos is BUSD, obviously, is the Binance coin. USDT is offshore. So I think that they're just doing this as an opening salvo against Binance. I do like the fact that the news just broke that Chuck Cascarilla and Paxos are likely to litigate this and fight, which did not seem to be the case at the beginning. But I think that the damage here is already done. Also, the investment contract side, whether you have an expectation of profit, that is not the entirety of the Howey test or what makes something a security. And there are a lot of sort of ways that they can get around that to still deem something a security. But I do think it's nonsensical, as I'm sure all of you do.
All right. Well, mind your biz. You have Paxos cooperating on some level. They're still issuing these for another week or two. You can redeem them until 2024. So we have Paxos somewhat being cozy with them. We have Kraken and Jesse Powell, one of the staunchest free speech advocates out there. They're also cooperating. Is it surprising to you that these exchanges are just so not hesitant to, work with these regulators, even though they're not really giving us much to go by?
Yeah, no, not surprising at all, DZ. Frankly, I mean, you mentioned Jesse Powell and you mentioned Kraken in particular, and it is one of the exchanges that in my consulting business that clients of mine they'll use for some of their commercial needs, right? So not like quite industrial, like large scale, but for business needs, Kraken has been kind of a safe choice to make. So, so on the one hand, disappointing, but no, not surprising. And here's why: you have a lot of these exchanges, and these two groups are no exception that need to do business in territories like the United States. So even though they have fallback corporate formation across multiple continents and in multiple countries, and they really could just take their business elsewhere, realistically, you look at the numbers, you look at the amount of value they'd walk away from, the amount of business they'd walk away from if they slam the door shut on the United States. And no, they really can't just say that they're going to take the ball and go home. So they have to figure out how to make nice with American regulators, or their business model just doesn't work.
All right. Well, Ben, Scott, he brought up a good theory. This may be just a way of taking pot shots at CZ, taking shots at Binance. Do you see this as more of a war on stablecoins or more of a war on Binance?
Oh man, let's be clear. People, I just tweeted this. People are saying that, credible sources say the SEC is getting ready to go after Circle and USDC. Wow. What a story. Open your eyes, people. They're clearing the way for USDC. They're not going after USDC. FTX, what did they do in August other than invest all your money? They announced they're coming out with their own stablecoin. Gemini, hurt by the earn program. Let's see what happened there. Well, they have a competitor, USDC, Gemini Dollar. Now you look at Binance and you start to figure out what the issue is here. Coin market cap. Let me just check this real quick. Coin market cap right now, BUSD, there is $15 billion worth of BUSD out there. USDC, $41 billion worth. Tether, $68.4 billion worth. Think about this. If USDC were to absorb all of BUSD's, the people who are trading BUSD, if they use USDC instead, or the European version as well, then that pretty much catches them up to Tether, like overnight. There's going to be a power move soon to ban Tether in the United States. It's not going to affect your Tether. You're not going to lose money if you're invested in it. You can go to Coinbase, and guess what? For free, you can swap it over to USDC. They're clearing the way for the digital dollar. That's what this is all about. That's what this thing against Binance has been about from the beginning, and it's becoming clear now. I couldn't figure it out. Like, is the one piece of this puzzle that I was really missing is that, like, why are they so focused on blaming Binance for an insolvent FTX? Kevin O'Leary, Sam, every person under the sun who was on the Solana /FTX /Alameda side, they're pointing fingers at Binance. Because what's going to happen is they're going to try to use this to get rid of BUSD out of their way. They don't want, Binance is uncontrollable. Binance is kind of the Vladimir Putin of crypto exchanges. You can't regulate them because they're not in one place. You can't make them do what they want, what you want them to do. They don't fit in any regulation box. The only way to go after them is to go after their money supply or to go after them, criminally in different countries. So what you look at here is they're putting a squeeze on Binance. That's what Signature Bank was about. Signature Bank, guess what? As soon as Signature Bank was announced that they were going to be stopping different things they were doing in crypto because they're having problems, all of a sudden, Binance restricts the amount of money people can withdraw. at one time without, different, restrictions or whatever. The reason why they did that is because they were using Signature Bank and they had a lot of their liquidity for off ramping fiat on there. This Binance thing has felt like a witch hunt from the very, very, very beginning. And now we're starting to understand why. And I don't know how I missed this. How did I miss this? When BUSD is the number 3 stablecoin, right behind USDC coin. They're clearing the way. USDC will be the digital dollar. When the digital dollar is ushered in, there's no need for stablecoins, really, because the dollar holds its own value as $1. Of course, inflation occurs, but $1, just like one Bitcoin, is always equal to $1. So I really think it's going to be very fascinating to see all this play out, because now we understand the target. Now we see how they're attacking Binance and putting pressure on them. And if you remember when they showed their balance sheet, Binance did, the big question was about what? Don't you think it's so weird that so many people hold BUSD on the exchange? And CZ was like, I can't help what people hold on the exchange. We don't force people to trade into stuff. People are in stables. It's like, looking back, from the very beginning, this is a chess move to go against BUSD.
Yeah, and the plot actually thickens beyond that. If we share, this is breaking from CoinDesk 2 hours ago. Issuer Circle reportedly sounded the alarm on the rival Paxos after learning BUSD was not properly backed by reserves, leading to the NYDFS to start investigating. This is, again, reported by CoinDesk 2 hours ago. And that is right. USDC also burning at a tremendous rate. Looked here last month, $44 billion market cap. Right now, 38. Just on Friday, this is according to Trust Nodes, 4.7 billion USDC was just burned in that one 24-hour period there. And their legal officer also is arguing now about staking and how it's failing the Howey test on 4 levels. And so now they have the legal out there issuing statements, which typically you don't see unless prompted there. So there's a lot of smoke, and whether or not there's a fire, that remains to be seen. But Scott, I kind of want to ask you about, something that we've talked about on this show before, and we kind of speculated on it, but given the recent events, where do you put the likelihood that the issuer of a USDC or of a CBDC in America would be by Circle?
Well, I think that maybe is the next step to the plot that Ben laid out so eloquently, and I agree 100% with what Ben said. You guys also may remember there's another wrinkle in that story, which is that Binance just a few months ago basically eliminated USDC from their platform and forced people into BUSD to trade. So this seems like a retaliation for that and makes perfect sense in the context of what Ben just laid out. I do think that it's likely that depending on the regime in the United States, that a private stable coin could become the de facto CBDC without them actually having to create one themselves. There's obviously a long history in the United States of private businesses doing things better than the government. And so I do think that there's a non-zero chance of that happening, but it's really hard to speculate on the percentage chance of something like that being the inevitable outcome. But either way, it's very clear. Even if you go back to last summer, the Lummis-Gillibrand bill was very heavily discussing stablecoins. I think stablecoins are the low-hanging fruit for regulators and legislators to basically start to get a handle on the crypto industry, and choosing a winner would not be a surprise in that context.
Yeah, I would agree. Well, Evan, let's ask you from the trader's perspective there. If we do have a massive rollout of a government-issued CBDC, we all got to get on the same board. Will that kill trading in America, especially leverage trading? I mean, will it even be able to exist under low margins? Because there's a lot of places that do offer American support. It might be 5X, might be 3X. Can even that survive if this happens and there is a true top-down CBDC?
Yeah, I think what you said, the last part, it's most likely probably going to be the 5x limit, the 4x limit, similar to kind of what you see with stocks, like on E-Trade, stuff like that. That's my main guess. Kind of just a matter of time. I mean, most likely we'll probably see more news on this by the end of this year, probably into early next year. I mean, it takes some time for things to happen, but I think the days of using a VPN and getting away with it and it being so lax, I mean, those days are numbered. Enjoy it while it's still there. Plan on moving to a different place where it's allowed. You know what I mean? Good things don't happen forever. So yeah, I think it's ultimately that's the most, probably a 90% chance that's what we'll see, a limit of like 4x, 5x, something like that.
Is limiting Americans to 5x good for overall, or is this a bad thing overall, you think?
It's stupid kind of because you could go to Vegas and lose everything you have in a matter of hours. It makes no sense. It's really just to kind of help the big boys. For somebody like me who, could afford to put more money in the exchange, I could get the same outcome with 5x, as 30x. It doesn't really matter to me the way I trade, but there are some advantages for it. I mean, you don't really, unless you're some crazy scalp trader, you don't really need to go above 5x. So, I'm kind of indifferent on it. I could not care, but comparing it to other things you could do, like sports betting, DraftKings is legal, and more and more states now. There are just so many other ways you could lose money. It's just stupid. It makes no sense. You know what I mean?
Yeah. Well, I trade the 30-second chart. So, I like those crazy
Yeah.
leverages as well. Well, mind
Yeah.
your biz, we're painting a scary future where, there is no non-amenity, there is no protection, there is no free speech. What is the bull case scenario for people who do care about security, care about the crypto punk ethos, the whole ethos of the cypherpunk movement? Is there a bright future, or is it just all doom and gloom? Help me out here.
Well, the first step in recovery is acknowledgement that there's a real problem, DZ. And I think that the first thing I need to do for the Bit Squad and for anybody watching is just reaffirm to you that yes, you should be afraid. You should be very afraid. And if you're not afraid now, I'd like you to start today. And if you're already a little bit afraid, I'd like you to be more afraid because this is very real, right? The threat of you losing all of your privacy, the threat of a CBDC actually taking away your sovereignty, the threat of being forced only to have certain choices as far as what you can use and how you can use it. It's not just that it's coming, it's that it's already being architected. And a couple of members of this panel have already pointed out some ways in which we can detect the way that plan is being rolled out. But make no mistake, it is here. It's not coming, it's here. So unless you go out of your way really, really fast, really, really soon to learn how to win back your privacy, and Evan said it really well, a VPN isn't enough in some cases. If you want to use centralized platforms, you have to go much more beyond that. No, privacy is it is the final frontier of digital identity. It is the final frontier of learning how to become a citizen of the internet. And that's why my platform, personally, my brand has been privacy advocacy so much over the last couple of years. After getting into cryptocurrency and doing indie media in this space, it became obvious that unless we know how to protect what we've earned, what we've gained in the cryptocurrency ecosystem, then it doesn't matter. It can just be taken away very, very easily. But it's worse when we opt into systems of control like a CBDC. So, no, does that answer your question,
Yeah.
or should I go a
Yeah.
little deeper down the
Yeah,
rabbit hole?
no. It's good. I'm seeing a little bit of glimmer of hope. There's a little bit of break in the clouds. As long as we have people like Seth, aka Mind Your Biz, fighting the good fight and really just doing a good job of educating people on how to break free from the shackles here. Well, Ben Armstrong, I want to give some red meat to the XRP community. I want to give them a reason to hit that like button. If you're watching at home, please go ahead, hit that like button. I'm seeing a possible case where the XRP settlement case or the court case with SEC versus Ripple could have some reverberations for stablecoins in America. Is there anything with maybe political capital, maybe clarity down the line after the ruling? Is there anything where any scenario where maybe this changes the outcome, and how do you think it will change?
No, I don't think it's going to be changed. And I think that one of the use cases for XRP has been and is and has always been to kind of be the cog in the wheel of what will become known as wholesale CBDCs. Retail CBDCs are going to be what we use as citizens of the United States, right? You go to Walmart and you need to get a Tupperware container because your grandma's casserole is so good you just got to save it. You go and you buy it. It's $2.99. You use your digital wallet, scan it, boom, done. Now, wholesale CBDCs are a completely different animal. So obviously, XRP itself is a network of value, and so it's going to kind of act. We're going to have a dual economy. Is what's going to happen. We're going to have one economy that is the world retail economy that all citizens are using, and then another one that the banks and the institutions, and in some cases, maybe corporations might be using. They're going to have their own economy where they're sending money back and forth. In that economy, XRP acts as the reserve currency. on RippleNet for the banks that use Ripple in their software, and I think it will be most major banks. Once this case is over, you're going to start seeing banks here in America signing up. The narrative, by the way, of you don't have to settle in XRP, you can use it without using XRP, that's dead. That's across every bank that they work with in every country they work with. They are rolling that out stage by stage. So for new partners that come on, I assume immediately you have to use RippleNet and ODL and settle in XRP. For ones that are, maybe have already been on the plan but haven't been settling in XRP, there will be a cutoff time in the next couple of years where they will have to move over and switch. I don't know what the timeline is. I think it's short though. I think it's less than 2 or 3 years. So you're also going to have, so XRP is going to be the reserve currency between, let's say China wants to send money to, Mexico. The way that works in a traditional system, they have dollars. Someone deposits what do they call the currency? In the yuan. Okay,
Yuan.
Deposits the yuan into a bank. People's Bank of China takes that, moves it to dollars, takes the dollars, sends it to Mexico. The person receives it over there, and they withdraw it in pesos, and the bank does the swapping. XRP is going to be that reserve mechanism for the banking system, but it's going to happen instantaneously. Now, when we look at wholesale CBDCs, I don't know if this means that there will be other kinds of CBDCs that spin off of XRPL, or if that means that basically there will just be part of the supply that is built for large corporations and large institutions to be able to do their own sitting. Shut up, Siri. To do their own sitting back and forth without necessarily having to even go through a Ripple, because that'll be possible. It'll be possible for, if you have an address and I have an address, I don't have to go to a bank to swap it over. But what we're going to have is a lot of different CBDCs around the world, and they're not all going to be congruent, and they're not all going to swap the same way. So because some have talked about doing theirs on Stellar, while some are doing it on, Ethereum, and others are doing it on, who knows what chain. That's where the complications may come in. If we have CBDCs on different chains, you're going to need one kind of thing in the middle to move stuff around. But
yeah. Well, quick follow-up, Ben. What kind of timeline do you give U.S. government-issued CBDCs hitting our wallets? Is this a 5-year play, 10-year play?
Well, in 2021, I said 3 to 5 years. It's
Okay.
2023. So
Okay.
the next 1 to 3 years, but most likely 3.
I'm going to go around the blockchain. Evan Aldo, what kind of timeline are you giving government-issued CBDCs here in America?
Yeah, I think I agree probably with Ben. It's going to take most likely a few years the way things work. I mean, probably at least 3 years, I would say. Let's see, 2023, 2025, 2026, that area. Maybe they'll do it more in the next bull run to kind of get people out of, the Bitcoin or whatever.
Oh, I like the idea of having it in
it.
26 just in time for Bitcoin to start
Yeah.
crashing as everyone has these new government-issued tokens to spend
Yeah.
in it. Scott Melker, what kind of timeline are you giving government-issued CBDCs in America? Might be muted there. I think you said 5. Not the best slipper.
I said 5 years, potentially even 10 years wouldn't surprise me. And I would also go with if ever, because I think that they may go with a private company like Circle.
Okay.
Government issue.
Mind your biz. I know you don't want to answer this question. I know you want the answer to be an infinity symbol because it'll never happen. When do you see a government issue CBDC hitting America?
I've got a one-word answer to this, and that is to the audience: resist.
Resist. I like that answer. You know what? I'll answer the same. Resist. All right. Well, let's move on to the last topic here. Again, we are brought to you by bcvault.com. Make sure you check them out to store, and presend.io if you want to send your crypto securely. Links are in the description, as well as everyone's links here that is on the show today. Make sure you follow. Make sure you check out their stuff. Putting out really, really good content. But let's talk about some scam numbers. Go ahead, Ben.
Yeah, sorry. I was jumping all over, and then I realized I was on mute, so nobody could hear me. I want to just touch on what Scott said real quick. He said that he doesn't see it ever happening because they're going to roll out a private one. I agree with that 100%. That's my basis for 1 to 3 years. Circle and USDC, like this is it. BlackRock's been buying. Why do you think BlackRock's been buying up huge amounts of the supply? Back in 2020, I don't know if I remember this very vividly. In September, I believe it was, when they do that crazy meeting out in Wyoming or somewhere where it's all like the media and different institutional people are there at Jackson Hole. And Jerome Powell, but this was the very beginning of the bull run in 2020. This was when Bitcoin started gearing up, moving forward. We came out of the post-halving kind of doldrums, and things started happening. PayPal was a big announcement that was made during that time. And the other big announcement was Jerome Powell said, oh, did you know the United States government, we're actually open to using a private company to do this. That was the dog whistle, that it's going to be Circle and USDC. Because if you go look at the timing of that, and you look at some of the timing of Circle getting big investments, not a coincidence. They're around that same exact time. So I think there's no way our government is going to create its own blockchain. The question is going to be, what is the transition going to look like as USDC moves from an open blockchain to a closed blockchain? And that'll be really interesting to watch.
Yeah, just be careful Googling transitioning. All right, well, let's look at some CPI data right now. And there's some scary stuff out there. There's a lot of scary data involving savings with Americans. I have a few graphics I kind of want to show. This is the total debt balance. You can see housing debt and non-housing debt, firmly on the uptick since 2014, Q1 of 2014. We also have one or two more pictures I want to show you here. Another one is going to be the savings rate in America. We'll show that in a second. But the CPI numbers, I want to use their language. It was quietly adjusted to show that inflation, it didn't come in under expectations. It actually met expectations. And here's another headline just showing credit card debt jumping almost 20%, hitting almost $1 trillion, $930 billion right now. And consumer savings rate is lower than ever. Off the rails here. Here is the personal savings rate. And you see a huge uptick, maybe coincide right around free cash hitting people's bank accounts, but then coming even lower than beforehand, and maybe even lower than we've seen in the past 20 years there. So a lot of bad news from the media saying the economy is, maybe not recovering. Maybe all this positive news isn't as positive as we are led to believe. But let me bring it to you first, Ben. Obviously, we know the figures are fudged. Obviously, we know, core CPI, inflation, you name it, it's gamed. When will the average American wake up? Or is it honestly just going to be never?
Yeah, the average American is never going to wake up. It's going to be really sad. Unfortunately, we're moving to a zombie apocalypse. And, unfortunately, you won't have another day on Earth. It's happening right now. The contagion is around us, but not the crypto contagion. It's a literal virus turning people into zombies. Look, I think the truth is there's only so many people that care about this stuff. What do people care about mostly? How much is milk at the grocery store? That's what they care about. How much is gas? How much is a house if they're going to need to upgrade to a bigger house because they're having kids? These are the things that matter to people. But unfortunately, the financial IQ, economical IQ of the average person in America, especially, is so low that all they can do is complain about those things and yet don't understand how it's happening or don't understand how we have to fix it. And these are some of the same people that will say Bitcoin's a scam, right? So what needs to happen is we need to have some kind of third-party watchdog that controls the numbers of these things and where all of the data that goes into them is available on every single report that comes out. So you can see like, hey, in the 80s, we judged inflation this way. But so you look at the graph and you say, oh man, we're doing much better now. No, actually, it's because they just changed the numbers. So we need transparency from the government, and the government itself is never going to be that transparent with us. And so, especially as we move to eventually a closed blockchain CBDC, they're going to be trying to hide money, smoke and mirrors more than ever. They want you to think that everything is okay. And in a sense, everything is okay. Like people aren't starving right now in America. I mean, there are some people who are starving, but they were starving before, before the recession. And so the fact is, I know people from all walks of life, play ball with the parents at different levels, You know, go to school, my kids go to school with people at different levels. It's the kind of thing where the average person right now is not feeling it outside of the cost of some of the things that they buy, such as milk or groceries. They're just changing their budget a little bit. They're saying, well, I can't afford, I can't afford to buy 2 games for my kids every month for their PlayStation. We need that extra money to go to groceries. People adjust those budgets, or they're putting it on credit cards. So I don't think people will necessarily wake up. I think those of us who are awake, it's on us to call for a higher standard of clarity and transparency. And that's where we're going, guys.
All
Blockchain
right.
is about transparency. That's where we're going. Let's demand in all areas of the government.
Well, let's talk about a higher standard for living. Now, mind your biz. I had you paint a bleak future, try to give me a glimmer of hope. But now I'm going to paint, I want you to do the opposite. I want you to scare us into submission here. Wages aren't keeping up with houses. Wages aren't keeping up with rent. School is skyrocketing. 25% of millennials are living with their parents right now. So my question to you is, do you think Gen X is the last generation to do better than their parents, or will things reverse course here?
I think it depends on how you define doing better than your parents, and it depends on how you define the majority of like where the average is. What I appreciate about what Ben just laid out is that the average, the center of the market, and specifically middle class America, they're dead. Like all of these government actors and all of the economic actors that have come in to try to scoop up profits in the ways that they have by giving out toxic loans have worked together pretty effectively, I should add, to literally destroy the savings of what would have been the current middle class from the millennial generation. So millennials themselves, are they doing better? I think they would be if they could fit into that category of being middle class. But I think broadly speaking, that America is so incredibly divided between the haves and the have-nots that there's no such thing as a middle class now, and we may not ever see it come back if we're not extremely careful about how we preserve and guard our wealth, and maybe even build it more in cryptocurrency and in other high yield assets. I don't want to like come across as crossing the line into giving financial advice there, but you can just see this very clearly. If it's true that what Ben was saying, that the average American is mostly just fixated on the price of milk, the price of gasoline, the price of typical goods that they have to put into their monthly budget, or week over week, they're just paying attention to how, oh, well, that got a little more expensive, then yeah, how could they possibly be doing as well as Gen Xers who were focused at a much earlier age on things like acquiring real estate, investing into a portfolio that made sense, that actually helped them get ahead, saving for retirement, ever even thinking they could retire? I mean, it's not, it's night and day, the difference there, right? So what I said before, I think still holds true now. If you're looking at cryptocurrencies and you don't know how to preserve your digital privacy, including in cryptocurrency and your anonymity, then if you're a millennial, right, then you resemble part of this little diatribe that I gave, then you will continue to fail. You will continue to struggle because you'll always be preyed upon by people who want to give you cheap toxic loans, FTX, crypto.com, Celsius, right? You'll fall prey to some of these schemes that try to separate you from your crypto, or you'll fall prey to some of the other schemes from bad actors in our government who want to prevent you from being able to get yield in a transparent and good way, right? So, such as what's recently been announced by the SEC in preventing staking. Now, I don't want to get too far down that rabbit hole either, but I just want to say that yes, to paint a picture with broad strokes, millennials are not doing as well as Gen Xers, and I actually see that Zoomers, unless they correct course, they could potentially do worse. However, I think what I'm seeing so far with that next generation is that it's just a further of that gap, a further widening between those two camps of those who understand how to accrue value and wealth and are doing extremely well. They're like Neo in the Matrix, right? Everything just looks like a way to gain wealth and to separate themselves from the system. And then there's everybody else who's trapped inside. There is no in between ground. There is no middle class anymore. And that is by design from the people who got us to the situation in the first place.
All right. Well, Scott, we're painting some scary stories here. We're painting a dark outlook. I'm not like Wile E. Coyote with the dark hole on the side of the canyon. I feel like I'm about to run into it, and it's going to hurt. It's going to be head first. But I hear a narrative, and maybe you've heard this narrative, and maybe you watching at home have heard this narrative. And the narrative is Bitcoin fixes this. But can Bitcoin fix this without the US dollar breaking? Does Bitcoin fixes this mean a gallon of milk costs $500?
I mean, there is the element where you live in a Mad Max dystopian future and need your army to go to Gastown to get your milk, where Bitcoin is $1 million. And I do think that is a possibility. I think that Bitcoin fixes a lot of things, but it obviously doesn't fix everything. And I think we've learned that through this cycle, of course, when there was an expectation that it would be a hedge against inflation and other things. And I think to a degree, Bitcoin will fix it in the future, but we got what we asked for, unfortunately, from Wall Street adoption and from institutions who took it as an asset that they treated like everything else in their portfolio. We wanted them here. Now they're here and they're shorting it and they're using it like anything else in their portfolio. It trades 24/7. They can dump it anytime, which they can't do if they're panicking on a Saturday at 3 p.m. at their kid's soccer game, right? And so we've, to some degree, fed the beast. And now we're going to be fed to the regulators and to the legislators as a result of that. But circling back, I mean, there's a couple funny things. First, to one of Ben's points, that we're supposed to have a third-party watchdog. In theory, that's supposed to be the Fed, which is absolutely laughable. One other thing is I laugh at 25% of millennials living with their parents, not at them, but because SBF turned out to be one of them, even though he was a paper billionaire. And also, you pointed out all of these metrics about savings and credit cards and stuff. I think that, to Ben's point, people are really cheap. Unfortunately, they're not financially educated, which is not their fault, by the way. That's purposeful. And right now, they're literally having fun staying poor. They're still spending money on all the stupid things that they were spending money on before. They're just drawing down their savings and running up credit card debt to do it. And I don't think that is necessarily a result of the price of eggs, avocados, or milk. I think it's because most people still have not decided to make any sacrifices in their life. I do believe that Bitcoin will fix a lot of this in the future. But I also believe that a lot of the narratives that we pounded home for so often about Bitcoin are solved by other things. Like, unfortunately, stablecoins are a better peer-to-peer cash. Unfortunately, if you're living in a country that has hyperinflation, most people are not looking to Bitcoin. They're looking to get their hands on stablecoins because they want dollars, and there's a lack of dollars. And this is a way that they can actually do it without going to the black market or being cut off. So to some degree, I would say crypto fixes this at this point rather than Bitcoin fixes this, and that Bitcoin's sort of purview has become a bit more narrow.
All right. I think that's a good point. Crypto fixes this. Doesn't necessarily have to be Bitcoin. Well, Evan, I believe you're the youngest of all five of us here. And are you seeing that as well? Is there, because there's a lifestyle creep as we're ending the 14-year bull market, you know, there's a little bit of a lifestyle creep. Maybe they went out twice a month. Maybe they upped it to 8 times a month, you know, went from once every 2 weeks, twice a week. Are you seeing a curtailing of lifestyle choices now that avocados are up, now that eggs are up, you know, maybe gas is going to go on the way up and it's a better time to buy crypto. Maybe you should be saving money. Are you seeing people changing their lifestyles, or is this, you know, how do you see this ending? Are they going to be able to change their lifestyles, or are they just going to continue to rack up debt until Visa, MasterCard says, hey, no more?
You know, what I've noticed is Amazon just come out. I was just on Amazon the other night and they started this new thing with kind of like same day delivery or whatever. And, you know, kind of this instant gratification thing that we've seen in this last decade with all the new technology. I think that the credit card debt is going to continue to rack up until, you know, until the bubble kind of pops. And we're getting close to that bubble popping. We're getting kind of close. And there's a lot of similarities to now and kind of, you know, look at the roaring 20s. That was the first time where people were able to drive, people were able to go out to stores, you know, kind of that availability. And that could be compared a lot to Amazon, a lot to Uber Eats, all this instant gratification. And you just get so used to it. And we looked at, you know, the credit card charts, consumer debt. I don't think it's just going to slow down, you know, overnight. I think people are going to kind of be forced, you know, to make these sacrifices. And I think typically what you see, and I think the empire, you know, obviously is starting to decline. It takes a while for it to really fall apart and somebody else to take over. But, you know, with all the nation's debt and everything, I think that you're going to see more of the decline of the empire, you know, more people. I think unemployment's going to continue to rise. I know it sounds negative, but it's just what it kind of looks like. And I think this coming decade here, you know, until 2030 or even a little bit more is going to be similar to kind of the 1930s, you know, before the war, when it was just more of a depression, more of a depressed state. And what Seth was saying as well was a really good point. I mean, the younger people are it's one of two things. You know, it gets more as time goes on. There's less of a middle class, so there's certain people who are like Neo in the Matrix. They're able to break out of it, and you know they keep winning no matter what they do. Kind of, it seems like, and that's their paradigm, and that's, you know, there's a lot of things that go into that. And other people, you know, just go into the masses. It seems into, you know, in terms of jobs too. You know, if you look at kind of how the 1980s were with the baby boomers, you know, they worked a 9 to 5 job, and that job was 9 to 5. Now, for, you know, I remember a few years ago when I worked a normal job, my 9 to 5 job was really 7 a.m. to 8 p.m. at night a lot of times, sometimes even later, you know, just to make a decent salary. But, you know, most of that money I put in into crypto, luckily back in, you know, 2020 in those areas. But, you know, it does get harder, and then you kind of see it finally collapse. So, yeah, that's typically, you know, what sadly seems to be happening. Markets, I think, will continue to go down. I think, you know, one of the biggest regrets too of younger people or people in general is they didn't put enough money into the stock market in the last decade. But people don't understand, you know, typically the decades are not the same. Typically, you don't have a decade like the 1980s and then the 1990s right after. That was peak of the American empire, where the DXY went up and the stock market went up. I mean, I think it would be so unlikely for this next decade to repeat something of that nature. I think we're going to see more of a decade like 2001 to 2011, where it's just not, you know, not the thing we're looking for. And a lot of times what happens when you do have the crash, the last thing I want to say is, you know, people are forced to sell. You know, not a lot of people want to sell. They may have put a lot of money into, let's say, NASDAQ, you know, crypto, all these, you know, risk on assets, S&P 500 even. And then the credit card debt rakes up. They get, you know, into a bind, and they're going to be forced to sell when the market crashes. A lot of people, they don't want to sell, but they're kind of forced to sell. So sadly, I know it sounds like zombie apocalypse, negative, bringer of bad news, but, you know, knowing the right things here, swing trading, you know, doing it carefully, you know, think of ways you can short the market. There's other things you can do. You got to be very careful with it. It's a great way to lose money too. Be careful, but, you know, we have this advantage, and we have this advantage here as, you know, people who actually study this and do this for a living. So yeah.
All right. And yeah, you do have a chance, and make sure you follow everyone's channel. Make sure you follow Evan. You know, everyone is putting out really, really good content. But that is all we have time for today. And it looks like Scott, you end up taking it home. Whoever has the most points at the end leaves us with 10, 20 seconds of a parting thought. So Scott, feel free, take away the episode.
Resist. That's all I got. We can just end it the same way that he did and that you did. I really do think that that's the point. Things are going to get far worse before they get better, and it's only up to you to look out for yourself.
All right. Resist. That's all we got, but don't resist hitting that like button. Until next time, easy out.